So today we're going to be talking about daily and weekly buyers. So these are actually the four pillars to determining a buyer's week above. Here is the week. Week above equals lower prices. That's for a reversal. Then close below this low equals lower prices. That's like in a bearish continuation and all of that. Then here, week below here equals higher prices. That's for a reversal also. Then here, close above this candle here equals higher prices. That's continuation of the bullish trend. So here I'm going to give you some examples of the daily buyers on GU, then maybe the weekly buyers on BTC and gold. So here on gold, on GBP here, there was no close or wick above this candle. So this is actually an inside bar candle. So what happened? The next day, the market took this candle range high, then went straight for this candle range low. That was eliminating all liquidities. Then after sweeping this candle range low, what happened? It wicked below this low and closed above this range. So remember, wick below equals higher prices. So what will be our next target here? Here, the market closed above. The next day, rallied upward. So here, week above, here on the daily time frame, then lower prices. All this was actually a manipulation move here. So it swept this high again, then closed below. Thus, you could have actually taken some profit off this daily candle range here. So let's go to the lower time frame so I can show you before the reversal or the second push. Yeah, here you got your turtle soup after sweeping our high. Got your turtle soup. So you could have actually gotten something from this whole move here, but this is actually the Friday's candle, and I don't like trading Fridays and Mondays. I focus mainly on Tuesdays, Wednesdays, and Thursdays. So going back to the daily chart here, I'm just going to actually skip this whole side of the market, because why? We are actually on the last, or let me say, the ending of the month, and the price action during then is not actually very nice. So let's go to where there are normal price actions. So let me start from here. here, week below equals higher prices. Then here, this whole move downward was actually a retracement to this CRT high, which was actually used as a catalyst to push price higher. So don't say because you got a week above, so let me be looking for bearish signals. No, because this move downward was actually a retracement to the CRT high, which actually sent price higher. So if you look at this from these 2 weeks, from this one above and this one below, which is more larger, which is more longer, the one below, obviously. So remember what I actually told you guys about long wicks. They either signal bullish confirmation, bullishness, very strong bullishness, like in this case, long wick, very strong bullishness, and long wick downwards, very strong bearishness. So that's that. So here we got a close above. So here, close above, higher prices, close above, higher prices. Then before close above, this candle was Monday's candle actually. So this is your Monday inside range candle. Then Tuesday did nothing. Then Wednesday manipulated. Then wicked below this Monday's low. Then closed back into the range. So wick below equals higher prices. Let's break down. Let's come lower and let me see into this. Okay. So here, let me start from here. Wick above, close back into the range equals lower prices. Target your opposite side of the range. Trade the third candle. So here, this was Friday's range. Why I don't actually trade Monday and Friday? Because basically, sometimes Monday will range, then Tuesday will take Monday's low, then expand towards Wednesday. And sometimes Friday will range, then Monday will take Friday's high or low, then Tuesday we expand towards the opposite side of liquidity. So here, this was Friday, and this was actually Monday. Monday took Friday's high, and here, Tuesday expanded aggressively. Then Thursday, this was Wednesday, expanded towards our opposite side of the range, and this was Thursday, which actually crashed through all this low resistance liquidity run over here. So here, week above, lower prices. Here, took this opposite side of the range. This was Monday's low. Tuesday did not actually take it. So what happened? Wednesday took Monday's low, then closed above, week below, then closed back into this range here. Then what actually happened? A continuation the next day for bullish price action, which actually happened on Friday towards our opposing draw on liquidity, which is actually this high. So week below, then close back into this range equals higher prices. The next day, price exploded, taking the opposite side of this range. So let's go further. So here, there was no sweep below this low. The market just closed back into the range. So closed back again, sweeping this. Then what happened the next day? This was Tuesday. This was Friday. I don't trade Fridays. This was Monday. I don't trade Mondays. Tuesday, what happened? We swept Monday's high with this move. We swept Monday's high with this move. Then we wicked above Monday's high, then closed back into the range. Wick above equals lower prices. What happened the next day? Here, closed below this low and sweeping all this liquidity here and taking finally our opposing side of the range, which is this candle's range low. So here, close below lower prices, close below lower prices. Don't say because there is a long week, oh, let me start looking for longs. Close below this previous candle's low equals lower prices. Close below again, lower prices. So here you got a little rebalancing of this FVG. Here, long week, then closed back into the range equals higher prices. We got a short-term reversal to balance an imbalance here. Then here we got consolidations. This will be NFP week because of all these long weeks. Then we got a retracement back into a discount. If I go to the 4-hour time frame, this move from here to here, it's actually a discount of the range here to here. So you can see the 0.5 level. This move coming lower is actually a retracement to the discount region. So here, there wasn't any sweep. I could just say this was a tiny sweep. So moving on to the next day. This was Monday and Tuesday retracement into a key level, then wicked below, then close above, which is actually higher prices. Then what happened? Wednesday, we got a retracement profile again, a retracement and a rating profile. So this whole move was not actually large or that. Then Thursday swept Wednesday's low with this move, then closed back into the range equals higher prices, then going higher and higher and higher. So you can see how I actually determine my daily bias. Very easy and very straightforward. So here on BTC USDT, I'll be talking about the weekly bias. So let me start from the peak, which is this here. So we actually swept this high. Then we closed back in below this range. Closed, wicked above these highs, then closed back with this long wick showing a bearish reversal. So this actually is equals to lower prices. Sorry about that. Wick above, close back into the range, lower prices. So here, continuation for bearish movement, lower. Then here, this was actually a retracement profile to this order block. Then we continued going lower till we took out the opposing side of the range. So here, this was actually a model 1 entry model. So here, this was a retracement into this order block and taking more orders before price actually dumped lower. So if we go to the daily time frame, so let's actually break this down a little. If we go to the daily time frame here, this was our weekly time frame order block here. Then here, let's start from this price action. So here there was a wick below, sweeping all this liquidity here, wick below, long wick, close back into the range here. Then I would just say close above equals higher prices, then close above. The next day, price explodes towards this liquidity here. After sweeping this liquidity here, we got a wick above here, which actually sends price lower, then closed back on this range. This was actually used for sending price lower. CRT high, CRT low as key level, then send price lower. So here, this was Saturday and Sunday. Then what actually happens Monday? We got a close below here, a large close below here, which is actually confirming bearishness. Then here, we got a continuation closing below here. This is actually confirming bearishness. And we actually took out our final opposing draw on the weekly candle range low. So that's how you actually determine your daily buyers and your weekly buyers. So here, let me go to gold weekly time frame. So here, let me start from this lowest low. So here, close week below, close above, higher prices. So this move was actually returning to this rejection block, which was actually used as a key level. Let me highlight this for you all to see. Yeah, you can see, remember I told you the midpoint of a rejection block is very sensitive, and this was actually formed after taking this candle range low over here. Then the market actually ranged on Monday. Okay, this is the weekly time frame. ranged here, then manipulated into the 50% level of this rejection block, and we got higher prices closing above. CRTI used as key level, close above higher prices, close above higher prices, close above higher prices, and close above. Remember the long wick, and you got your long wick over there as well. You got your long wick over here showing bullishness. Then what happens? Price expands again, close above higher prices, close above higher prices. So you can see determining a daily bias is actually pretty easy. So here, wick below equals higher prices. Wick below, then close back into the range equals higher prices. And here, close above higher prices, close above higher prices, close above higher prices. Then here, this candle was an inside bar candle. There was no close above or wick above during this move. Then what happened with the next candle? Sweeping this candle range low over here with this move. Then wicking below with a long wick here. And this is actually showing sign of bullishness with this long wick after taking this candle range low. So what happens the next day? Market explodes through the CRT high, close above, close above, close above. Then here we got a reversal. Wick above. Here, wick above, lower prices. Then here, close below this candle range low equals lower prices, close below lower prices. So that's all. Basically, it's actually just eating a piece of cake. You don't need to actually stress yourself about this. So that will be the last topic for level 2. And this is actually just too easy. So your job right now is to actually be consistent and refine your edge constantly and focus on improving, not proving or actually seeking validation from anyone, and focus on your own progress. So I want to actually see you all in level 3 because we have actually basically done just the tip of the iceberg. So level 3 and 4, that's basically where all the magic is gonna happen. So I won't actually like any of you to miss those levels. So that will be all for today. And I wish you good luck in good trading.